Checkmate. China preparing to disclose real gold reserves. Not the official number, not the 2,000 tons they report to the IMF. The real number, the one hidden in military vaults, the one accumulated through Hong Kong for decades, the one that could be 10 times higher. And the timing. Less than 24 hours after the West smashed paper prices, Beijing publishes a direct order in the official journal of the Communist Party. A call for a powerful currency, a call to end dollar dominance, a signal for what intelligence sources are calling the financial military parade. When China reveals this number, the dollar doesn't decline, it collapses, and gold doesn't rise, it teleports. The question is, will you be positioned before, or will you be watching from the sidelines? When the checkmate is announced, welcome to the John Talk Show. Now, before we go any further, if you've been watching this channel for a while, you already know what we do here. We don't sell hype, we deliver intelligence. So if you're new here, and you're above 50, like many of our respected viewers, you know the value of good information. You've seen markets rise and fall. You've seen promises broken. So do yourself a favor. Hit that subscribe button, not for me, for yourself, so you never miss what's coming next. Now, drop a comment below. Tell me, where are you watching from today? New York? London? Dubai? Karachi? Let me know, because what we're about to discuss affects every single one of you. The date is Tuesday, February 3rd, 2026, and while most investors are staring at red candles on their screens, while analysts on television are celebrating the dollar's strength, while the financial media is busy explaining why gold just crashed, something far more important is happening on the other side of the world, something that will change the global financial system forever. In Beijing, the Chinese Communist Party has just published an article, not in a newspaper, not on social media, but in Xi. Now, most Western investors have never heard of Xi, and that is a serious mistake, because Xi is not an ordinary magazine. It is the flagship theoretical journal of the Chinese Communist Party. When something appears in Xi, it is not opinion. It is not commentary. It is official policy. It is the voice of President Xi Jinping himself. And what did this article say? It said, China must build a powerful currency. It said China must accelerate the internationalization of the yuan. It said the strength of China's currency is directly connected to national security. In simple words, the president of China just announced the era of dollar dominance is ending, and the era of a gold-backed yuan is about to begin. Now, the timing of this article is critical. This publication appeared less than 24 hours after something very unusual happened in Western markets. On Monday, the price of gold and silver crashed violently. Paper contracts flooded the market. Billions of dollars were used to push prices down. Silver fell to $83. Gold dropped below $4,900. The mainstream media called it a correction. They said investors were losing faith in precious metals. They said the dollar was strong again. But that was not the truth. The truth is, that crash was artificial. It was a coordinated attack using paper derivatives. It was designed to make the dollar look powerful. It was designed to make gold and silver look weak. And Beijing watched the whole thing. They saw the desperation. They saw the manipulation. And their response was this article. Think about what China is really saying here. They are saying you can play your paper games, you can manipulate your charts, you can print your derivatives, but we have something you cannot print. We have gold. Real gold, physical gold, thousands of tons of it. For years, China has officially reported holding approximately 2,000 tons of gold. Every month, they announce small additions, 20 tons here, 30 tons there. But anyone who tracks the actual flow of metal knows these numbers are a joke. The real number is hidden. Intelligence analysts have tracked gold imports through Hong Kong for decades. They have tracked domestic mine production. They have tracked purchases through the Shanghai Gold Exchange, and the math does not add up. The real number, according to multiple credible sources, could be 10 times higher. China may be holding 20,000 tons, perhaps even 30,000 tons, hidden in off-balance sheet accounts, hidden under the state administration of foreign exchange, hidden in military storage facilities, waiting for the perfect moment. And that moment may be now. This is what analysts are calling the financial military parade. Every year, China holds a military parade in Tiananmen Square. They roll out tanks, they display missiles, they show the world their power. But there is another kind of power, financial power, and China is preparing to display it, not with missiles, but with a spreadsheet. Imagine the scene. The United States is drowning in $38 trillion of debt. Confidence in the dollar is shaking. Markets are unstable. And suddenly, China holds a press conference. They do not announce a war. They do not launch an attack. They simply update their official gold reserves. They announce, "We do not hold 2,000 tons. We hold 30,000 tons. Our currency is now backed by more physical gold than any currency in history." What happens to the dollar in that moment? It does not decline. It collapses. What happens to gold? It does not rise. It teleports from 5,000 to 10,000 overnight. This is the signal. This is the green light. And for those paying attention, the countdown has already begun. There is a man named David Jensen. Most people have never heard of him. He does not appear on CNBC. He does not write for the Wall Street Journal. He does not manage a hedge fund on Wall Street. But David Jensen understands something that most analysts completely miss. He tracks the plumbing. Not the paper, the plumbing. The actual physical movement of silver bars across the world. While everyone else watches charts and reads headlines, David Jensen watches trucks, he watches planes, he watches cargo ships, and what he just discovered should terrify every Western government. He found a vacuum, a massive vacuum, a vacuum so powerful it is sucking the physical silver out of the Western financial system at a rate that cannot continue. Let me explain this in simple terms. Right now, at this very moment, silver is trading at two completely different prices. In New York and London, the paper price is around $86 per ounce, but in Shanghai, the physical price is much higher, much, much higher. Chinese buyers are paying a premium of 29% just to get their hands on real metal. That is roughly $23 per ounce above the Western price. But wait, it gets worse. When you add China's 13% value-added tax, the actual replacement cost inside China is $36 above the Western price. $36 per ounce. Now, think about this like a businessman. You have silver sitting in a vault in London. You can sell it there for $86, or you can put it on a plane, fly it to Shanghai, and sell it for $122. The flight costs about $2 per ounce, insurance and handling. Another 50 cents. So your total cost to move the metal, $2.50. Your profit, $34 per ounce. Risk-free. This is not speculation. This is not gambling. This is pure mathematics. In the financial world, this is called an arbitrage, and a $34 arbitrage is unheard of. It is an infinite money glitch. It is free money sitting on the table, and every single trading house in London and New York is grabbing it with both hands. Think about what this means. If you are a bullion bank, if you are a mining company, if you are anyone holding physical silver in the West, why would you sell it in New York for $86? When you can sell it in Shanghai for $120, every rational actor in the market is loading silver onto pallets, putting it on cargo planes, and shipping it east. This is the vacuum. This is the giant sucking sound, and it is emptying the Western vaults at record speed. The LBMA vaults in London, draining. The COMEX vaults in New York, draining every single day. Thousands of bars leave the Western system. And here is the critical part. Once that silver crosses into China, it never comes back. Never. China does not export silver. They are a black hole for metal. It goes in and it stays there forever. The silver enters the Shanghai Gold Exchange. It gets melted down, restamped with Chinese characters, and it disappears from the Western ledger permanently. It can never be used to settle a COMEX contract again. It is gone. Now, here is the tragic irony. Remember the price crash from Monday. When the Western banks smashed silver down to $83, they thought they were saving the dollar. They thought they were showing strength. But what did they actually do? They made the arbitrage wider. They made it more profitable to ship metal to China. They put their own strategic inventory on a clearance sale for their biggest rival, the United States government, accidentally subsidized Chinese accumulation. They are selling the family farm to pay the credit card bill. And the Chinese, they are not complaining, they are backing up the trucks. They are saying thank you. They are buying every single ounce that the West is foolish enough to sell. The refineries in Switzerland are working 24 hours a day, not refining new mine supply. The mines cannot keep up. They are melting down old American bars stamped United States Assay Office, and turning them into kilobars for Shanghai. The West is erasing its own history, shipping the raw materials to build China's future. And the worst part, the flow cannot stop. As long as the Shanghai price is higher than the New York price, the metal will move. It is gravity. Water flows downhill. Capital flows to the highest return. And silver. Silver flows to the highest bidder. Right now, China is the highest bidder by a mile. The only way to stop this drain is for the Western price to rise, to match Shanghai. 86 must become 120, but that would mean admitting defeat. That would mean the suppression failed. And Washington is not ready to admit that, not yet. But they will have no choice, because the vaults are emptying, and time is running out. There is a calendar on the wall of the State Department. Most people never see it. Most people never think about it. But if you could look at that calendar right now, you would see something very unusual. Tomorrow, Wednesday, February 4th, 2026, there is a meeting. Not a normal meeting, an emergency meeting. Secretary of State Marco Rubio has summoned diplomats from across the Western world, Europe, Japan, South Korea, Canada, Australia. All of them flying to Washington, D.C. on very short notice. The official name of this meeting, the inaugural Critical Minerals Ministerial. The official purpose, to strengthen and diversify critical mineral supply chains, to ensure economic resilience. That is what the press release says. But press releases are written for the public, they are written to sound calm, they are written to hide panic. Let me translate what this meeting really means. China is taking everything. Please help us. That is the truth. The United States government has finally looked at the numbers. They have seen the same data David Jensen has seen. They have seen the $34 arbitrage gap. They have seen the planes leaving New York and London. They have seen the vaults getting emptier every single day, and they are terrified. This meeting is not a trade summit. This meeting is a war council. Marco Rubio is trying to build something unprecedented, a NATO for metals, a military alliance, not for soldiers, but for silver, for copper, for lithium, for all the critical minerals that modern civilization cannot survive without. Because here is what Washington finally understands. Silver is no longer just a monetary metal. Silver is no longer just something people buy for investment. Silver is now the most strategic industrial commodity on Earth. Think about what silver does. Solar panels. Every single solar panel requires silver paste for conductivity. The green energy transition. Impossible without silver. Microchips. The most advanced semiconductors use silver interconnects. The artificial intelligence revolution. Impossible without silver. Military equipment. Every Tomahawk missile contains silver. Every F-35 fighter jet contains silver. Every military satellite contains silver. National defense. Impossible without silver. And here is the problem. The United States consumes 5 times more silver than it produces domestically. 5 times. America is completely dependent on imports. Imports from Mexico. Imports from Peru. Imports from the global market. And right now, China is buying that global market. They are paying a 29% premium. They are outbidding everyone. They are vacuuming up every available ounce. Secretary Rubio knows what happens next. If the COMEX vaults empty completely, if there is no more silver available in the United States, the military-industrial complex grinds to a halt. Lockheed Martin calls the Pentagon. We cannot build guidance systems. We cannot get silver paste. Raytheon calls the Pentagon. We cannot manufacture missiles. The supply chain is broken. That is a national security nightmare. That is why Rubio is holding this emergency summit. He is going to pressure the allies. He is going to demand cooperation. He is going to propose agreements, restricting the export of critical minerals to non-market economies. Non-market economies. That is diplomatic code for China. He might even propose capital controls. New regulations. Making it illegal to ship silver to Shanghai, calling it a matter of national defense. But here is what Rubio does not understand. Or maybe he does understand. And he is simply desperate. You cannot legislate away the laws of economics. You cannot stop water from flowing downhill. You cannot stop capital from chasing profit. As long as the price in Shanghai is $36 higher than New York. The metal will move. If you ban direct exports, smugglers will move it. If you block American companies, third-party nations will buy it and resell it. If you build a wall around the silver, the black market will tunnel underneath. There is only one way to stop the drain. Only one. The Western price must rise. $86 must become $120. The gap must close, and it will not close by Shanghai coming down. Shanghai is paying for real metal. Shanghai is paying the true price. New York is the one lying. New York is the one suppressing. New York is the one pretending silver is worth less than it actually is. The gap will close by New York going up. This summit tomorrow is an admission of defeat. It is the United States government publicly admitting that their own free market is destroying them. They manipulated the price too low for too long. They held the beach ball underwater for years, and now it is exploding upward, hitting them in the face. Rubio is trying to hold that beach ball down, With executive orders, with diplomatic agreements, with emergency summits, it will not work. The market knows it will not work. The traders see the desperation. They smell blood in the water. When the government starts holding emergency meetings about supply chains, it means one thing. The cupboard is bare, the vaults are almost empty, and time has almost run out. Let us talk about what happened yesterday. Monday, February 2nd, 2026. The Western banking cartel launched their biggest attack in years. They used every weapon they had. Paper derivatives flooded the market. Billions of dollars in short contracts appeared out of thin air. The price of silver crashed to $83. Gold fell below $4,900. It was shock and awe. It was financial warfare. It was designed to do one thing: break your spirit, make you panic, make you sell, make you believe the bull market was over. And for a few hours, it worked. Fear spread across trading floors, social media filled with panic. Analysts declared the metals dead, the dollar was saved. That was Monday. Now let us talk about Tuesday. The sun came up, the markets opened, and something remarkable happened. Silver did not stay at $83. It started climbing. 84, 85, 86. By the afternoon, silver was back above $86. Gold jumped back above 4,900. The entire crash erased in less than 24 hours. Think about what this means. The Western banks fired their biggest cannon. They used their most powerful weapon, and the market simply shrugged and kept climbing. This is a failed suppression, and in technical analysis, a failed move in one direction leads to a fast move in the opposite direction. When you hold a beach ball underwater and your grip slips, the ball does not float up gently, it rockets out of the water. That is what is happening right now. The shorts are trapped. The traders who sold yesterday at $83, hoping to drive the price to $70, they are now underwater. The price is $86 and rising every tick higher. 87, 88, 90, forces them to cover their positions. They must buy back what they sold. They become buyers. This is the fuel for the next leg up. The squeeze is not over. It is just beginning. Now look at what happened in Shanghai during this chaos. Nothing. The Shanghai price did not crash. The Chinese buyers did not panic. They did not care about the paper games in New York. They watched the price drop, and they bought more. They saw the discount, and they took it. While Western traders were panicking, Eastern warehouses were filling. This reveals the truth about Monday's crash. It was artificial. It was fake. The real market, the physical market, never believed it for a second. Shanghai kept bidding $120, while New York pretended the price was $83. That disconnect cannot last. Reality always wins. Paper always loses. So where does this leave us? There are only two possible outcomes now. Option 1. The Western price goes to zero, not because silver is worthless, but because there is no silver left to trade. The vaults empty completely. The COMEX defaults. The paper market collapses. Option 2. The Western price goes to $120. It rises to match Shanghai. The arbitrage gap closes. The bleeding stops. There is no option. 3. The $34 gap is a law of physics. It must close, and it will not close by Shanghai coming down. It will close by New York going up. The mathematics are undeniable. Now let us connect all the dots. President Xi Jinping publishes an article calling for a powerful currency, signaling the end of dollar dominance. David Jensen identifies a vacuum. $34 a profit pulling metal eastward. Secretary Rubio calls an emergency summit, desperately trying to stop the bleeding, and the paper price crashes, only to recover within 24 hours. What does this tell us? The suppression has failed. The manipulation is exposed. The emperor has no clothes, and the emperor has no silver. China is preparing for the financial military parade. They are waiting for the perfect moment to reveal their true gold reserves, to announce a gold-backed yuan, to deliver the checkmate. When that moment comes, the dollar does not decline, it collapses, gold does not rise, it teleports, and silver becomes the most valuable industrial commodity on earth, more precious than oil, more strategic than uranium, more critical than any other metal. So here is the final verdict. Monday's crash was not a warning to sell. It was an invitation to buy. The Western banks gave you a gift, a brief window, a discount subsidized by their own stupidity. Do not waste it. The vaults are draining. The arbitrage vacuum continues. The emergency meetings prove the panic. The price recovery proves the strength. Everything is aligned. The squeeze is alive. The financial military parade is coming. And when it begins, You want to be positioned correctly, not in paper dollars that are losing a war they cannot win, but in physical metal. That China is buying with both hands. The signal has been sent. The countdown has started. Ignore the noise. Trust the flow. The East is accumulating, the West is panicking, and the checkmate is coming.